Let's start with the layoffs we're seeing across the federal government. How do you expect this to affect the economy, both in the short term, and Alicia and I were talking about the long run as well?
Yeah, well, right now we're talking about tens of thousands of layoffs. And while that impacts people individually, and that hurts, it's a psychological impact that you want to be thinking about. A lot of them are what we call probationary. They were there for a year or less, and a lot of them are younger employees that were being developed to be the next leaders of some of these agencies. But what it does have is a psychological impact on people who are still in those departments, but also you start to see the government job numbers start to decrease over time. And that has been one of the most aggressive sectors for hiring over the last 4 years. Don't forget, the Biden administration hired some 1.5 million government workers month after month. It's been government jobs that have been growing. It's also been leisure and hospitality, and it's also been social service and health jobs. So you're going to see a reduction in government jobs, and that could eventually lead to a higher unemployment rate, as Alicia was mentioning.
So layoffs are happening across other industries as well. Caleb, you know this better than I do. Estee Lauder, Southwest Airlines, Chevron. These are huge companies, among the latest companies to announce cuts this month. Do you see other companies following suit as we go forward and we're seeing the tariffs and we're seeing these federal layoffs?
Yeah, uncertainty means that they're going to be hiring less and probably laying off some areas of their company because they want to protect their margins. Why? Because they want to protect their share price. These companies are beholden to their shareholders, obviously, and they want to make sure they're hitting those quarterly numbers. So if they're feeling like they're being pinched by higher prices due to tariffs or potential tariffs, they are probably going to trim their workforce or at least stop hiring for now. We've seen some other bigger companies, especially in the media sector, especially in tech sector, also announce layoffs on the margin. There's still a lot of jobs out there, and the unemployment rate of 4% is historically low, but it could easily rise very quickly, especially as you see government jobs start to be reduced. And after government jobs get reduced, the domino effect is contractors that are tied to the government. A lot of those jobs or contracts aren't being renewed, so that could also cause a spike in unemployment. It's kind of a perfect storm here where you could see a rise in unemployment and a slowdown in spending, and that is not a good recipe for growth.
I'm glad you mentioned contractors. I think a lot of people overlook that, just the thousands of people that have contracts with the federal government. Let's go to the January meeting. Just after President Trump took office, the Federal Reserve held rates steady. Labor conditions were stable. How will these latest developments that we're talking about in the job market affect their outlook when they meet again next month in March?
Yeah, well, they're going to see this week the Personal Consumption Expenditures Index. That's their preferred gauge of inflation. Alicia mentioned the CPI. That was at 3%. Inflation is still around. And not only that, but consumers expect inflation to trend at around 3.5% over the next few years. That is at we haven't seen those numbers since 1995. They expect prices to remain high. When they see prices remaining high, and the Fed knows this too, the Fed has no reason to lower interest rates except for pressure from the White House, and we know that the president would like to see lower interest rates. So far, Fed Chair Powell saying they haven't had contact yet with the Oval Office, but I don't think that's going to last very long. There's a meeting coming up in mid-March. We know that there's going to be pressure to lower those rates, but right now the economy, the signals that the Fed is looking at says there's no reason to do that at all. That could cause another spike in inflation where it's already higher than it wants it to be.
Caleb Silver, thank you. Thanks for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.